everyone, welcome to Let's Talk Business. In this show, we'll get you the top updates from the world of markets, finance and our economy at large. Well, markets ended their 4-day winning streak to end in the red today. Now, it was a volatile day of trade and all sectors declined, but metals were able to buck the trend. This comes after the Reserve Bank of India maintained status quo and didn't hike its key lending rate. My colleague Alex Matthew joins us for more from the BQ Prime newsroom. And Alex, take us through the highlights of the market action.
Well, it ended up being a muted session in trade today. It didn't begin that way. We started with gains, and at one point of time, at the high point today, the Nifty 50 was just about 110 points away from all-time highs. We ended with cuts of about 0.5%, like I mentioned. Now, the tide turned after the presentation of the outcome of the MPC meeting of the Reserve Bank of India, and they voted, as you know, to keep the policy rate unchanged. In fact, the stance was also kept unchanged, and the projection for GDP growth in FY24 was also kept unchanged at 6.5%. To some, that might have been a bit of a disappointment. But taking a closer look at the sectoral picture, you had most of the sectors underperform. In fact, the metal pack was the only one that gained ground today. The key underperformers were realty as well as the pharma pack. Now, among the key movers on the Nifty 50, you had Kotak Mahindra Bank, that was one of the biggest contributors to the declines today, down about 2.5%. Grasim also lost over 3%. And then among the others, you had Sun Pharma, Tech Mahindra and Tata Consumer all losing over 2% each. Among the gainers, and there were only about 12 of them in trade today, but you had NTPC, that was the key performer, up about 3%. And then you had the metal pack, like I said, JSW Steel, the key performer there, up about 2.8%. Among the other gainers, you had ONGC, Power Grid Corporation of India and Larsen & Toubro all gaining over 1% each. A few other honorable mentions to make, of course. You had 197 Communications, or Paytm as it is commonly called, gaining quite a bit of ground, ending up over 6% after it got an upgrade from BofA, that is Bank of America, and that is a buy for them. Tata Teleservices ended up nearly 15% on the back of higher volumes, and you had Gati that ended up about 4%, and volumes continued to improve for the company in the month of May. Attention, of course, now shifts to the Fed policy next week with the RBI monetary policy out of the way.
And while we're on the subject of markets, BQ Prime's Sajith Manghat spoke to market experts Dhananjay Sinha and Harsha Upadhyay about the top sectors that you can bet on. Listen in.
So I think as far as the auto sector is concerned, we have been fairly overweight and bullish. I mean, there are three reasons, three factors, and some of them have actually played out. So, for instance, number one thing that we had considered was the recovery in the volume which happened post-COVID, etc. There was sort of a serious recovery in volume, but what we find there is that it is actually peaking out on a seasonally adjusted basis. That is actually coming down now. So I think the volume for let's say two-wheelers and passenger cars, etc., have actually peaked out. I would say that even for commercial vehicle, it is actually the best is behind. So I would say that year-on-year growth is actually decelerated, but on a seasonally adjusted basis, these volumes are actually coming off. So I think one part of the auto space, which is like recovery in volume, has actually played out. Second part was that you have an improvement in average realization for the vehicles sold, largely because of value addition, etc. And as a result of that, there was increase in operating profits and margins, etc. So that has also happened. Third thing was the margin expansion. So the margin expansion was expected because we thought that there will be a reduction in commodity prices, etc., and that should start impacting the margins and stuff. So I think that has been partial. I think it is panning out, and in the last quarter we have seen some of that playing out. We think that it can continue going forward. So broadly, I would say that of the three variables, two of them have actually played out to the entirety. I think the last bit, which is the margin expansion bit, is still to play out in a significant manner. So I would say that even in auto sector, we need to be selective about which segment we are in, which stock we are in. So wherever there is resilience in volumes etc. Volatility is lesser. Let's say tractor, for instance, is one area that we are considering. Now, where you can have resilience in volume, and you can have margin expansion, two-wheelers, etc. Some two-wheeler names we are sort of considering there.
Clearly, this has been driven by autos and banking and financial services sector. To an extent, this is dragged by commodities and oil and gas sectors, I would say. Nevertheless, as you look forward, there is definitely a likely benefit that will come as commodity prices have moderated and are continuing to moderate. Many of the other segments can also see a cost moderation coming through lower raw material costs or fuel costs, and that should aid profitability. And if demand continues to remain as we have witnessed until now, or if it improves from these levels, the help in profitability margins and along with stable demand could drive a better earnings growth for overall market.
What about consumption sector? Because that's something which everyone also is looking very carefully. FMCG consumption, rural demand. What is your view on that? Have you seen in your interactions with managements and analysts some pickup happening in the rural demand?
Clearly, after the fourth quarter results, the interactions that we have had with many of the companies operating in the rural environment or in the consumption space clearly indicate that there is some expectation of a revival in terms of rural demand over the next couple of quarters. But obviously, this would also depend on the monsoon progress.
The other big story of the day, RBI's Monetary Policy Committee has decided to keep the benchmark lending rate or the repo rate unchanged for the second straight meeting. Now, while keeping the interest rate intact, the RBI governor noted that headline inflation in India is expected to remain above the RBI's target of 4% during the rest of the financial year. The RBI Governor Shaktikanta also gave a snapshot of the Monetary Policy Committee's decisions. Listen in.
The rate action this time, it is obviously a pause in rate action in this meeting of the MPC. Future action will depend on the evolving situation. Number two, headline inflation has eased, so also all its components. But there is no room for complacency. The MPC remains resolutely focused on 4% inflation target in the interest of sustainable growth. Number three, the Indian economy presents a story of resilience with macroeconomic and financial stability. Prospects for growth are steadily improving and becoming broad-based. Number four, healthy twin balance sheets of banks and corporates also augur well for GDP growth. 5. The external sector is eminently viable as reflected in the current account deficit situation, stability of the Indian rupee, and build-up of forex reserves. Number 6. RBI's liquidity management will be nimble and two-sided as per requirement and as demonstrated in our recent actions. Thank you.
Now, I'm sure that sounds a little confusing to many of us. So my colleague Vishwanath Nair joins us to put this in perspective, the decisions taken by the RBI Monetary Policy Committee. Vishwanathan, over to you. What are the key takeaways from the RBI's decision?
The Monetary Policy Committee in its June 8th meeting has decided to hold back any changes on the benchmark repo rate, which is maintained at 6.5%. Now, remember that this financial year, this is the second meeting, and for the second time that the MPC has decided to maintain the repo rate at 6.5%. As far as the stance of the MPC is concerned, the MPC with a majority of 5:1 has decided to keep the stance as withdrawal of accommodation. Now, this is a stance that has been continuing since last year, and although a majority of the members have voted in favor of it, one of them, which is usually Professor Jayant Verma, who has been raising this issue for a while now, he's been saying that withdrawal of accommodation actually does not really make sense in the context of monetary policy, and that ideal the ideal stance for the RBI or the MPC to maintain is neutrality. Now, during his speech, the Reserve Bank of India governor also pointed out that there is an expectation of inflation to rise in the second half of FY24. That is primarily because there are concerns with the distribution of monsoon in India, as well as concerns raising from El Nino, and these will play into the inflation expectations for the rest of the financial year. As far as growth is concerned, in FY24, the RBI is estimating about a 6.5% growth. That's a little slower than the 7.2% that we reported for FY23. Having said that, India will still remain one of the fastest growing economies in the world. The other point that the RBI governor did make a point to mention in his speech is that there's a question of liquidity. According to the RBI governor, currently the liquidity scenario in the Indian banking system is skewed towards certain banks who have a lot of liquidity, while some of the other banks have to tap into emergency windows of the RBI to receive any kind of funding, and the RBI's intent is to control this excess liquidity going ahead for this financial year.
The RBI governor also made another important statement. Now, nearly 20 days after the Reserve Bank of India announced the withdrawal of 2,000 rupee notes from the economy, 50% of the notes have been returned to banks. Listen in to what the RBI governor said while he detailed the return of the 2,000 rupee notes.
So far as 2000 rupee banknotes are concerned, you would recall that we had said as on 31st March 31st March this year, totally 3,62,000 crore notes, 2000 rupee notes were in circulation. After the announcement that we made, totally so far about 1,80,000 crores. 1.8 lakh crores of 2000 rupee notes have come back. And this is roughly about 50% of the 2000 notes which were in circulation on 31st March. So 50%, with reference to that number, 50% has come back after our announcement. And so far as there has been question about how much of exchange, how much of deposits, that figure needs a lot of reconciliation, because we find that there is some amount of overlap in reporting. So we want to avoid any possibility of double counting. So we are reconciling the figures. But broadly, on a provisional basis, I can say that about 85% of the 2000 rupee notes are coming back as deposits into bank accounts.
And monsoon has arrived in Kerala today. It has hit India with Kerala, and the IMD said that it is likely to advance into more parts of the Arabian Sea, the South Peninsula, India, Bay of Bengal and Northeast India during the next 48 hours. But the heatwave conditions are likely to continue over Bihar, West Bengal, Uttar Pradesh, Andhra Pradesh and some more states during the next 2 to 4 days. IMD's DS Pai told BQ Prime that El Nino may impact monsoon in the later part of July. Listen.
There is most possibility that El Nino impact will be more in the second half, maybe in the later part of the July also can have. That depends on how quickly the ocean will get coupled with the atmosphere. At the same time, we also have to add that the rainfall deficiency so far happened was because of the delay of the monsoon. It does not mean that the delay will decide the quantum of rainfall. There is no such a relationship at all. And not only that, we are expecting after middle of the June, there can be more rapid progress over the central India. However, because of this delay, and as the many models were indicating, and as IMD also had forecasted, during the month of June, the rainfall is likely to be below normal. That is less than 92%.
And that's all we have for you in this segment of Let's Talk Business. Thanks very much for watching.